Hey everybody, this is Elliott with Touchstone Financial Education, Chief Content Creator here. This podcast, we are going to discuss how to find the appropriate investments for you. And let me back up a little bit. In our last podcast, we discussed how to get started, meaning how do you find a platform that's appropriate for you, how to open the account, how to fund the account. We're going to continue on that theme with choosing the investments today. And just a little bit about us in the meantime. We do not sell financial products. We just educate folks on personal finances. So I appreciate all of you existing listeners and welcome to you new listeners. And if you guys have any questions, reach out to us. TouchstoneFinancialEducation.com is the website, and you can send us an email. It doesn't cost anything. And most importantly, ladies and gentlemen, we will not hound you with responses. If you don't want to know anything, we're not going to bug you 5 times a day with unnecessary emails. This is about education for the long haul on personal finances. And by the way, I know there's a lot out there in regards to making $1 million in a week with crypto and stocks and options, etc. We do not advocate for that. This is a buy and hold strategy, long term, setting yourself up for financial independence. With that said, on to the show. So we've got our platform, Fidelity, Vanguard, Schwab, E-Trade, whatever it is that you're using. Now we need to find those all important investments. And remember, when you opened your account, you answered a few questions. It's called a client profile, questionnaire. And they want to know how much money you make, how long you've been investing, if you have been investing, what type of things you find risky, what kind of things do you find conservative, so on and so forth. They're all laid out a little bit differently. But the idea is that these questionnaires are designed to help you narrow your focus on the types of investments that are appropriate for you. And we call that a risk profile. That's all that is. Because here's the thing, we don't want you investing and being nervous about your choices or not sleeping at night. You have to be comfortable with what you're doing, which is why financial education is so important. So you got the account open, answered some questions, we got money in there. Now we use our platform to help us find those appropriate investments. And one of the things I like about Fidelity and Vanguard is once you've answered that risk profile, they will usually put together a list of investments that are appropriate for you. So if you're an aggressive investor, for example, you'll notice they will show you very aggressive, mostly tech or emerging market type funds. And tech, of course, technology, emerging markets would be like China, the Middle East, Asia, and so forth. If you're more moderate, they're going to show you things like total stock market funds or index funds, which I believe everyone should have anyway. And I'm going to circle back to index funds here in a minute. But whatever they may be, take a look at those funds that they are recommending. Read up on them within the platform because within your platforms, ladies and gentlemen, you've got some great tools. Everybody's got a Morningstar page within their platform these days. And Morningstar is one of the oldest and most popular ways of determining if a mutual fund or an exchange traded fund is appropriate for you. If for any other reason, just look to see how many stars the fund has. So Morningstar uses a 5-star rating system, 5 stars being the best, one being the lowest. But on that page as well, will show you where the fund is that you're looking at ranked against other funds. And as we evaluate these funds, that is very important. How well is your fund doing that you're looking at compared to other funds in the same category? And basically, that's a roundabout way of saying performance is key. So we've got our list of investments that the platform is recommending. We're using Morningstar, and another component of your platform would be Zacks. Zacks is just as good as Morningstar, but I find that the Morningstar page is laid out just a little bit better for beginning investors. If you're more moderate to sophisticated, you probably prefer Zacks. Now, once we've taken a look at that performance, how well our fund has done, we look at a Morningstar page, for example. We see how well the fund has done relative to other funds in the category. After all that's said and done, we got to figure out how much this fund is going to cost us to invest through, right? Every fund has what's called an expense ratio. Now, this is just a fancy way of saying how expensive it is. Most index funds, like the S&P 500 index fund or a total stock market fund, has a very low expense ratio, somewhere in the neighborhood of zero point zero 0.02 to 0.04%. Put it another way, that's either 20 bucks a year all the way up through 40 bucks a year to invest in that fund, and that is very good. Now, we only see those very low expense ratios on what are called passively managed funds, index funds, meaning there is no money manager on the fund per se. They just invest in whatever index you're interested in. The Dow Jones Industrial Average, the S&P 500, the Nasdaq 100, the Russell 2000. Doesn't matter what it is, all you're going to get are all of those stocks in that fund from that index. That's why it's so inexpensive to invest in because there's nobody managing anything. On what we call actively managed funds, this is where there is a team of people picking stocks on your behalf. The expense ratio is going to be higher. And usually they can run, yeah, some of them are down around 0.04%, but usually you'll see zero point 0.3 all the way almost to 1 full percentage point per year. Now, does that mean we don't use them because they are relatively expensive? No, not at all. A lot of times, these actively managed funds are designed for a specific purpose, like investing in one country, like India, or investing in chips only, or maybe it's a real estate fund. Whatever it may be that you're looking for, don't be discouraged if it is a little bit more expensive. We're going to circle back to performance because that's key. And if the fund is performing as it's supposed to, if we see on the Morningstar page that it has 5 stars and it's on top of its category, then it might be worth making that investment. Again, don't just get up, don't just get caught up, excuse me, on the cost of the fund. Performance is key. Now, with that said, we've picked our funds, we know how expensive they're going to be, and just to make sure that we're still on the right track, I like to kind of cross reference or do some research outside of the platform. And the easiest way to do that, you guys, is open that Google page, take the ticker symbol, and the ticker symbol is the designation for the fund you're interested in, like VOO or VTI or FBLAX, whatever it may be. Take that, put that on the Google page, and you'll see the fund come up, the price today. There'll be a chart, usually with a green line these days because the market's done well, and you can check out the performance in 1 day, 5 day, a month, a year, 5 years, whatever it may be. Take a look and see if the performance through the Google search looks like what you've researched on your platform using things like Morningstar or Zacks. Also, when you pull up the fund on Google, it'll show you a list of other funds that are similar to it. Again, the idea here is to cross-reference that research to make sure what you're seeing inside the platform squares with what's outside the platform. And I got to tell you, as long as I've been doing this as a retired financial advisor, I always encourage my clients to do their own research. And what's nice today is that it doesn't take a long time. So I'm not talking about sitting down for an hour to research funds. All of this can be done within minutes, and especially you buy and hold investors who don't change things too often. I find that you guys like this because, again, it doesn't take too long. Check things out once a quarter. If you're more aggressive, if you're using actively managed funds, then obviously you're going to have to watch a little closer, but the research process is the same. Now, the Google search is one way. You can also look at platforms that are free, like Marketplace, and I know Yahoo Finance is still very important to a lot of individual investors. And there's a few others out there, but between, Marketplace, a Google search, Yahoo Finance, they've got that Google Finance component now. I think you'll find the answers you're looking for. Again, this is just to determine if that investment you're researching fits within your risk profile, is appropriate for you and your time frame, whether it be retirement, meaning you can't touch the money till you're 59 and a half, or you have interim goals, things you want to do before retirement. Buy that RV, take a trip, save for the holidays, buy a home, whatever it may be. these tools will help you achieve those goals. And like I said at the top, this isn't about getting rich overnight. And I know there's a lot of stuff out there that says, hey, you can make $40,000 a week by trading cryptos or stocks, etc. This is not that approach. This is more realistic. This is more in line with what Berkshire Hathaway and Warren Buffett and Charlie Munger do. Going forward, I'm going to record some more podcasts that talks about trading and being more aggressive. But because I'm kind of addressing beginners today, please start out this way. And as time goes on, as you learn more, I guarantee you your risk profile, or the amount of risk you want to take rather, will increase. It's just part of the natural process of learning how to invest. And thank you for listening to us here at Touchstone Financial Education, because again, we love to educate people on how to make their money work for them. Now, with that being said, it's time for the shameless plug. We here at TFE love to educate. We love to hear from our listeners. So please reach out. A lot of times when we put these podcasts as well as our videos together, believe it or not, we are responding to what you guys want to learn or to hear about. So don't be shy. Step up to the plate. Send us an email. We're not going to inundate you with a lot of emails and information, etc. If you don't want to be contacted, that's okay. We don't want to contact people who don't want to learn. We don't want to waste your time. And believe me, we are busy and we don't want to waste ours. Not to be rude about it, but I really want to reach out to people who are willing to learn. And as for the learning component, guys, we have classes which are also listed on the website, and we do personal consultations, and they're 1 hour in length. And this is to review what you're doing, how to improve if necessary, things like what is my 401k doing? I don't understand that. I just put something down on paper. We will run through, educate you on how that works. Same thing on your brokerage account. You just you want to learn how to trade stocks now? Give us a call. And again, because we do not sell financial products, all the information, all of the advice is geared towards helping making you a better investor. Thank you guys for listening today. We appreciate all of our existing listeners. Welcome to our new listeners. And if you can, please go to Facebook and check us out at Touchstone Financial Education. Please go to YouTube under the same name. Like, follow, share, and subscribe. Thanks for listening, and I will talk to you soon.